On Monday, ET now launches Global Mantra Outlook 2013, a special show that profiles 8 prominent fund managers from the City of London and gets their views on the global market environment. We begin the series with Jim O'Neill, Chairman of Goldman Sachs Asset Management. Here's an excerpt of his conversation.
How do you rate India's performance among the BRIC?
Oh, God, to be honest, I change my mind about it every week. And that's partly the great beauty and complexity of thinking about India. Some weeks, I think it is the most attractive, big picture economic story in the world because, of course, India's demographics are so good that if India just does a bit of the right thing, India could really grow for this decade more than China. It could. If India got everything right, India could grow by, I don't know, 11–12%. So some weeks I think, yeah, this is it. This is the big moment. But other weeks,
what brings you down on India?
Well, when you look at the complexity of India's democracy and the reality of Indian governments actually delivering on things that they even want to do, never mind things that they're not bold enough to try, it's really hard. It's the reality is it's tough. India's democracy is sometimes a questionable thing from that perspective.
So do you think that the market has jumped the gun as far as policy risk is concerned and that's going to come and bite us again in 2013?
It could be. I'm not sure, but I don't dismiss that possibility, unfortunately.
You're expecting a weaker 2013 for India?
Well, I think the background for equities will probably be quite good again. So, the BRIC equity markets are not expensive at all. In fact, collectively, it's the cheapest they've been for many, many years. So if China shows more and more signs of what appears to be the case of their economy improving, I think it will start to attract money back to that class, and India would benefit from that. But it's not the most attractive of them. I think China is now fundamentally very attractive. And so if the China recovery is for real, then China's going to finally have a decent year.
In your projections for growth, as far as India is concerned, you of course revised growth lower for 2012 to 6.2, which is largely what the consensus is talking. But for 2013, your growth projection is about 8.2, whereas the consensus is about 7.2. What will change over the next 12 to 18 months that India would kind of suddenly accelerate and see that much growth? Well,
because I think the consensus, the consensus is the consensus. The consensus is just something I like to actually benchmark myself against. It just, and it sort of lags reality. So the consensus came down a long way because India slowed. But it's not, if you look at leading indicators, they all look quite encouraging to me. Indian financial conditions have eased quite a lot the past year. The Fed background is quite promising. So the US and China look helpful. Leading indicators for India itself have turned a lot more positive, and the government's trying to introduce some very positive reforms. So I don't understand. The main reason why the consensus is predicting India to stay quite soft by recent standards.
They're expecting a recovery, but I think
it's tiny, given how India can be. I mean, India could easily grow by quite a lot more than even I'm saying. So I don't think, for India to grow by 8%, it's not a big thing at all.
Would that also call for some more rate easing measures from the central bank?
I think because the inflation picture is improving, if they want to ease, it's pretty easy for them to do so, yeah.
And what about the political risk in India? I mean, how much of that is accounted for India's performance? How much do you think is that a worry for India?
Well, what is surprising is that the political risk is of course, prevalent still, and it has been. And despite that, the Indian stock market has done well this year, and the rupee has recovered. So it just shows you how easy it is for Indian markets to rally, it seems to me.
So you see a better year for India?
It looks that way to me, yeah.